Happy Friday, traders. It is Friday, the 8th of September, 2023. Thanks for coming in today and checking out the markets with me as always. I know that I'm obsessed. I don't know about you, but this multi-dimensional chess game that we call trading is riveting. And here we are on another day. This is episode number 2533. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you for the mic check. Here's the convergent trading pre-market summary sheet this morning, the latest and greatest earnings. You know, we do have Kroger. It's Kroger is the largest grocery chain in the United States right now. At 33.853 billion. They beat expectations in terms of revenue. Actually, no, they didn't. They were expected at 34 billion. What they did is they beat earnings coming in at 96 versus 91 expected. So that's it. Looking at the current drivers, economic events and things like that, we did get the Canadian unemployment. It's lower than expected. Canadians overall had a, oh, Canada. Where are you? Okay. Well, I don't see it in front of me for some reason. But Canadian unemployment Canadian employment change came in at 39.9 thousand versus the expected 15,000. Pretty relatively small numbers compared to the US, of course. And the unemployment rate went to 5.5%, expected at 5.6%. So G20 is on deck, big deal. Lots of pressure in this kind of quiet war. Economic war between China and the U.S. impacting Apple. Of course, there was news yesterday that China's forbidding anyone who's working for the Chinese government to use an Apple device for work relating to the Chinese government. China being used as a pawn in this war between the U.S. economic war between the U.S. and China. So I'm going to move on. You know, you can see what's in front of you there, inflation rate tonight, but let's just get down to where we are in terms of technicals. The S&P is in a multi-distribution, pretty active price discovery profile, although the volume's not really all that great, especially given that tomorrow or Monday we roll to December on Monday, September 11th. So Monday session, which starts on Sunday night at 5 p.m. Chicago time, 6 p.m. Eastern U.S. time, that session will quote the front month of December 2023. So we'll need to shift forward on U.S. indices to Z3. So on Monday during the Trader Bite throughout the day, we'll be quoting ESZ3, NQZ3, RTYZ3, YMZ3, and so on and so on and so forth, which means that next week is rollover week. And since next week is rollover week, that also means that you can take your order flow indicators and just throw them out the window, including cumulative delta, because of the roll. If you don't understand what the roll is, let me know, and I'll briefly explain what that is in case you're new to futures. And if you're new to futures, welcome aboard. This is in my opinion, the most broad market there is to trade. In my opinion, also the most fair market there is to trade is futures. Again, as always, futures are not suitable for all investors because futures have leverage built in, and it increases your risk of ruin. So use your margins wisely, please. So anyway, back to the sheet. We're looking at volume at 161,000, which is a little bit lighter than what we would expect. The inventory is 15% short. It's basically balanced in the overnight session. In other words, we've traded about the same amount of volume above the prior close as below the prior close. The range is pretty good at 26 points, and the point of control shifting to 44.57. It was lower than that yesterday in the overnight session. And let's look at what we expected yesterday versus what we got. This is yesterday's video, and yesterday the biggest thing I warned about is that even though we were gapping down, so yesterday we were opening in the 36, 38 area, something like that. Yesterday's open was exactly 38 even. Even though we're opening below the prior session's low, I warned that historical probabilities are not in favor of a continuation lower, and I warned that given the posture of how the market closed the day before on Wednesday, that this is very, very likely to be responsive buying versus initiative selling this session. Responsive buying, so the primary scenario, which is outlined here, was looking for an open auction at the open auction out of range, and then we're looking to get back into the range, test out, and then push to where? Somewhere in the 60 range. Really, 71 was our key target yesterday, a gap to settle trade. This is the, for those of you who are here, I talked a lot about this. The video yesterday was 22 minutes long, and I covered this, and I explained the structure behind why I'm expecting and will be looking for responsive buying, so to trade from the long side as the key structure, the key opportunity for the day. If you have questions about that, I would certainly direct you to video number to episode 2005-32. You can find that on youtube.com. Do a search for Futures Trader 71 and just look for episode 2532, and that'll explain why my view went from short the day before, which was correct, to long yesterday, even though we gapped lower. And if we didn't pick up on the buy side, then expected 44.19 to 44.15, and ultimately a push to 44.02 again. So that's what we expected yesterday. Here's what we actually got. So we'll switch. Oops. Here's what we actually got. You know, a pretty steady one-time framing up, one-time framing ends right here. We open above, test below, we break the one-time framing, we finish in balance. The next day opens in balance, tries to push lower below the 45.10 to 07 low volume node right here, and then we can see that it's very likely to be initiative. So we came in expecting the market to be initiative to the downside on Wednesday, which it did, so that worked beautifully. And then yesterday it opened below in a gap down, and where did it end up? It ended up back in the range. Look at that, 60. Went to 63, expecting 60, and a further push would get us into 71. Could not get that done, but it did get us into 60. So yesterday's key prices to the upside were 60, 65, 68, 71, right? Those are the key areas above in the price map. And we managed to just get to 60. It did it in a very, very auction-y way, very textbook failed auction. Check this out. What is a failed auction? Can somebody tell me what a failed auction is? If you understand auction theory and the price discovery process, tell me what a failed auction is. Can't wait for your answer because it gives us blank, quiet video, which is kind of forbidden. A failed auction is when the market tests a key area, usually the prior day's low, a prior day's low, the current IB, something like that. And what happens here is the market goes down, it kind of trades, and it goes up, and then it trades a little bit, then it goes down, and then it probes below the last low. It basically checks to see if there's any interest for continuation in that direction. And it pokes its hand below that low, kind of dipping its hand below the water surface, and it gets bitten by buyers and it shoots up. And what that creates when you have a failed auction on the low, like we did yesterday, we had a 2-tick failed auction. So we put in the IB at 34.75. The low of day is 34.25, 2 ticks. So we had a 2-tick failed auction, and characteristics of a failed auction are that it's actually an excess. It's a tiny excess, but we can only see it and identify it because of the impulse it creates. Look at this rotation. 19.25 points. When you see this, when you see the market going to a low, sitting near the low, and then making a push, and then all of a sudden shoot up 19.25 points, what is your thinking process? Oh, it's a higher price, I should sell it? Is that what you're thinking? I hope not, because as a savvy watcher of the Trader Bite over the last 2,533 episodes, probably not that many, it's over 10 years of episodes, 10 years. As a savvy watcher of this program, you know that tells you that shorts are out of the question. I don't care if I have hyper confluence at 44.50, a failed auction with an impulse. The impulse is what makes the failed auction a failed auction. A failed auction with an impulse says I'm either standing by because the action is not clear to me, or I'm looking for longs. Most likely looking for longs because that impulse is likely to get a continuation. Is likely to get a continuation trade, high probability, somewhere in the 78, 79%. Do not rely on that. Past performance is not necessarily indicative of future results because I haven't done that study. I haven't refreshed that study probably in 8 years. But I don't expect that it has dropped to 50%. I expect it might have dropped to 72% or gone up to like 84%. I don't know. Just throwing some numbers out. But the last time I tested for this, it was about an impulse continuation, which is one of the key fundamental setups that I look for. It has a pretty high probability that the high of the impulse gets taken out after a pullback, and that's one of the key ways I enter in the direction of an impulse. And so you get this, pullback to a predefined area. What is a predefined area? So here's the impulse we're trading off of. This is the impulse. I'll put an I next to it. Actually, the way we mark it, I've been marking impulses for years, is an arrow that looks like this. And then you have this structure right here, this pullback that we came back to before we pushed the low, the 2-tick failed auction, a confluence with the VWAP. You get that VWAP push, and it just barely ekes out a high, which looks kind of weak. But here's the thing: this high is a weak high at this point. At this point, the profile's kind of flat up here. So it pulls back again, and then you finally get the push higher. So that's the one I'm looking for. We ended up settling at this price, which is also our point of control. And then it pulls back to where? Pulls back to the mid. And also the impulse went right to the full session mid. Right to the full session mid, pulled back to full session VWAP, full session mid, higher low, boom, pushes through, pulls back to RTH mid, and then gives us another high. And then from here, it's truly just balance. Okay. Really great structure. I wasn't here for it. Had a webinar at 12, had a meeting before that, and I was done because the expectation as it kind of moved back, waved back and forth, the expectation is that this is likely to, once it did this high, the expectation here, and I wrote it in the Convergent Trading chat channel, I said this may be just a chop show from here on out, and it just ended up grinding up. So it actually gave more than what was expected. The overnight session, we immediately opened pullback to yesterday's IB high at 51, which is also the mid-century. Remember, this is a major strike price for next week, and then it pushes directionally into 69. Remember, 68, right? Our levels 68, 71. We have a naked settlement up here. It pushes to 69, pulls all the way back, and then falls through as Europe opens. The market's kind of heavy, and now it's just been sitting sideways. So we have a multi-distribution price structure. Price structure right here, and let's draw a nose in. And this guy is eating a big burrito with his mouth wide open here. Yum, yum, delicious. So we have multi-distribution price structure right here. And so what we can tell from the overnight auction using the volume profile is that both sides are really actively seeking value. So we have 26 points of range, which tells us that we're likely to see a little more price discovery on the open. The catch is we are at full session VWAP, full session mid, overnight point of control, at yesterday's settlement, at yesterday's volume point of control. All just on top of each other. That's where the guy's nose is right here. Let's give him some eyelashes, huh? That's where the guy's nose is, and that's where we are. So choppy open is expected. It's balancing a little bit, so it may have a directional push. It has a higher low in the overnight session. It has an okay taper at the low and okay taper at the high. Man, with rollover coming in tomorrow, with no news on deck today, it's another day where it may be very, very choppy on the open. The additional indicator of chop on the open, and this is your last day to use that cumulative delta before the roll, before next Wednesday or Thursday, when we see that about 90 or 95% of the roll is complete, usually by Wednesday, Thursday. Today, the cumulative delta, his mouth is too big, open too wide for a blunt. How big a blunt can he smoke? Like, that's a lot of weed. So I figured a burrito would be about the right size. Or your favorite, whatever, hand food, hamburger or whatever. If you look at the cumulative delta, look at it, it's absolutely flat for the session. I mean, cumulative delta is telling us that these guys have balanced each other out. The aggressors have balanced each other out. The price discovery folks have balanced each other out. Look at this delta. It's fugly. It's fugly. It went negative below the open, even though it did so slowly. It's trying to go positive above the open. So the delta and price are complementing each other, but the overall participation is quite poor. So I'm the bearer of bad news here this morning. Now, the catch here is this. The catch here is that when the market's sitting in the middle and it's bouncing and it's not doing much, any kind of movement, any kind of push results in a lot of people getting pushed out. Remember, the current volume, where's the current volume? Let's look at our sheet again. Current volume 167, which is kind of light, but it's 167,000 contracts since the open. Not all of those are going to have to cover because they're not all trading in the same time frame. but it's okay, and that may cause a directional push because we are sitting sideways right in the middle of the range. However, the overnight profile, the burrito eating guy or the sandwich or the big bong puffing guy, um, it shows multi-distribution. So there's been some price discovery, and they're sitting here in the middle on top of all of those indicators. The full session VWAP. I mean, that's a volume weighted indicator. The overnight volume point of control, yesterday's point of control, settlement. In other words, we went through an overnight session, we checked the top, we checked the bottom, and we ended up in the same spot. This is not a good look for the ES opening. And the NQ finds itself in the same kind of predicament. Okay, the NQ, even though it's showing a positive delta here, finds itself on top of settlement, on top of the overnight point of control, on top of VWAP, and the mid is just above us at 15.3, what is it, 15, I don't know, 283 or something like that, or 293, something like that. I can't read the chart very well. Let me expand this up and see if I can see the scale a little bit better. Yeah, it's 15,283 for the point for the mid. So it's all just kind of not looking so hot this morning. So just that doesn't mean we shouldn't trade and monitor what's going on or turn on TV and start watching Netflix or whatever. Just pay attention, because the fact that it's sitting in the middle could be a driver. Oh, I lost my light. Could be a driver for a move out of here, but in general, I'm not expecting this to trade very well. The biggest thing you should take away from this, by the way, is, because we're here, is we're not out of balance. And how do we make money? We make money when there is some sort of imbalance, right? When the market is out of tilt, when the market's out of tilt, that's when we look to make money. It's when it has to reprice is when we expect to make money. When it has to reprice, that's when we expect an advantage. We don't expect an advantage when the market is perfectly priced, right? I'm not going to come in here and see that an apple stand, every apple stand at today's farmer's market is selling apples for $2 a pound. I'm not going to get into that market and be like, oh, I'm going to make a killing at $2 a pound. No, it's when there's a huge line of people at $2 a pound, and I can come in and offer that, have that supply from everybody else get exhausted, and then I can offer mine for $2.50 because there's demand, and I can make some money. So when the market's opening right at value, there's just no money to be made, in my opinion, at least the way I read and look at the market. And I've been doing it this way since 2005. I've been trading for 23 years, trading futures for 21 years, okay? And I have not really changed things all that much. I haven't needed to, because I'm looking at the market in its true form, in its naked form, so to speak, to the best extent possible. So that's that. Let's take a look at the NASDAQ. Look at that, same story, the NQ. Remember yesterday I said the NQ is in a much weaker position relative to the ES, much stronger position relative to how far it got to the downside against that rally day. But I said I don't expect the NQ to fill the gap, and it did not. It pushed, it pushed barely into the gap by about 5 ticks and fell back off. But look at that, it's a pretty balanced profile, opening in range, in value. This morning, same thing, very likely to be choppy. Good time for OTF to do business both ways in that range. It's not a good time for us to try to take a directional bias. So take that into account. That's just my opinion. It's not a trade recommendation. What did I say about crude yesterday? I said, keep your hands off the mouse if you are looking for the next breakout. We still have one-time framing intact in crude. But I warned yesterday that it's not likely to go anywhere, and that 87.75 will remain a tough area for it to kind of push and hold. And look at it, it went to 87.71, and we have an inside day, and we're currently inside of yesterday. This is coiling. Crude is creating a triangle, and it's very likely to continue. Why? Because the powers that hold the spigot, that control the spigot, want it to be so, and it's likely to go in that direction. But crude's got a lot of weak structures beneath it. So once it gets out of here, especially if it puts in a rounded top and starts falling, that trade, in my opinion, is likely to go quick. And the number where the market thinks that this thing's got its sweet spot is 80 even. So now we have 88 to 80 even, a whole lot of ticks difference between these two prices, creating a potential opportunity of an outside-in swing-ish type of situation. But we opened yesterday in balance, and I warned you that crude is not likely to break out. It's likely to go into balance. It is in balance, and look at it. It was completely in balance, and today, yet again, it's in balance, and it's very, very slow. So until it breaks out of here, crude hands off, in my opinion, unless you're scalping. Good luck. Market's opening in a minute and a half. I know I covered a lot, but whenever the market has a lot of structure, there's a lot to talk about, and we've had some pretty good structure this week, okay? Good luck. Let me know what you think. If you have any feedback, hit me up in chat or comment on the video. I'll catch you all on Monday, where we will be trading December in the U.S. indices. We'll be rolling to December on Monday. Talk to you then.